And good morning once again, options traders. Well, I was just speaking with a trader recently who was trying to figure out how many vertical spreads you could make from a given list of strikes. And he was trying to figure this out because, in his view, and I would certainly agree with this, in order to make the best decision, you need to know all of the choices. And he was making it more difficult because he was trying to list them all separately. He was trying to look at the bull spreads, the bear spreads, the debits, the credits, one strike wide, two strikes wide, and things like that. And it can get confusing. But there is an easier way to figure out just how many vertical spreads that you have to choose from. And more importantly, I think this video just shows why you need to spend some time considering exactly which spread you want, because there's probably more than you are considering. So let's go figure out how many vertical spreads are there. And before we do, as always, please be sure to click like and subscribe. It's greatly appreciated and helps to promote the channel. And so the way that we're going to do this, it's a little what's sometimes called a sophisticated counting technique that's used in statistics a lot. And the way that you do it is to simply count the ways. That's the key word there. How many ways are there to do something? And if we can figure out how many ways there are to do, let's call it task one, and how many ways there are to do task two, we simply multiply them. So for example, let's say if I flip a coin and then roll a standard six-sided die, what are the total possibilities? Well, how many ways can we get for the coin to come up? Well, there's two ways, heads and tails. How many ways are there for the die to come up? There are six ways. So we have two ways and six ways. We simply multiply those and we get 12 ways. There would be 12 different combinations. So here's the combinations laid out. We could get a head followed by any of the numbers on the die, 1 through 6. Or we could get tails also combined with any of the 6 numbers on the die. So here are the possibilities. We could get a head matched with a number 1, head matched with a number 2, and so on, all the way up to a tail matched with a number 6. So there they are. Those are the 12 possibilities. Okay, let's try another example. Let's say that we pull the 4 aces from a deck of cards. How many ways are there to draw 2 aces from this group of 4? Well, as before, we simply count the ways. There are 4 ways I could draw the first card, and then 3 ways remaining to draw the second card. So there would be 4 ways times 3 ways would be, again, 12 ways. And there they are. We could get the ace of clubs matched with the ace of diamonds, ace of clubs matched with the ace of spades, and so on. What if we wanted to count the number of ways we could draw all 4 cards? Well, there would be 4 ways to draw the first, 3 ways to draw the second, 2 ways to draw the third, and then finally 1 way to draw the fourth. And so there would be 24 ways that we could arrange these 4 cards. Okay, so that's just some of the basics that we use for counting techniques. Now let's apply it to options. Here's a standard options board layout. We've got calls and puts, long and short, and let's say that we have only 2 strikes just to make it simple. Now notice if I buy the 100 call and I sell the 105 call, that is a bull spread, but I could also buy the 105 and sell the 100, and that would be a bear spread. That would be a credit spread. Over on the put side, I could buy the 100 put and sell the 105. That would be a credit spread or a bull spread. But I could also buy the 105 and sell the 100, and that would be a debit spread or a bear spread. So with just 2 strikes, here the 100 and the 105, we have 2 different strikes equals 4 verticals. Now, the way that we count these is we can say there are calls and puts. Think of it like you're trying to pick a vertical spread. I can either pick the call side of the board or the put. So there's 2 choices right there. And then with 2 strikes, in our example, the 100 and the 105, we have 2 times 1. There are 2 ways to choose the first strike and 1 way to choose the second. So there's 2 different combinations there. And so when we look at the calls or puts multiplied by the number of strikes, we get 4 verticals. So that's where that number is coming from. Now what if we make it more complicated with 3 strikes? Well, now I can choose either calls or puts, that's 2 different ways, multiplied by 6 different ways here. because I have 3 ways to choose the first strike and 2 ways to choose the second. See, I could buy the 100 and sell the 105, but I could also buy the 100 and sell the 110. Or buy the 105 and sell the 110. Or I could buy the 110 and sell the 100. See, there's all these different combinations of choosing the first strike and the second. And that's going to make the difference between a bull and a bear spread. So with 3 strikes, we actually have 12 verticals. And again, that's found by counting either calls or puts. That's our first decision. I have 2 choices there. And with 3 strikes, I have 3 ways to choose the first strike and then 2 ways to choose the second, which are 6 ways. So we multiply these out, 2 times 6. So with 3 strikes, we have 12 verticals. So here they are. So the way that I've laid this board out, the first strike is the long one and the second is short. So this first one is buying the 100 and then selling the 105. But I could also reverse them. I could buy the 105 and sell the 100. That would make it a bear spread. So we have the bull spreads over here, we have the bear spreads over here. But I could do the same thing with the puts. I've got bull spreads and bear spreads. So again, with 3 different strikes, choosing calls or puts, we have 12 verticals. And there they are. So the thing that you want to start noticing is that this stuff starts multiplying out quickly. And that's why it can be very hard to try to make a decision. Once you really start looking at all of the different combinations, it's not a real easy decision. What about with 4 different strikes? Well, now with 4 strikes, we have 24 different verticals. So again, we can choose between calls and puts. We have 2 choices there. And then with 4 strikes, we have 4 ways to choose the first, 3 ways to choose the second. There's 12. So 2 times 12 equals 24 different verticals. So the thing to notice is look at this. As you go past, let's say 5 strikes, you're up to 40 different verticals. If you have 10 strikes, there's 180 different verticals in there. And so this black line is just simply the graph of this second column. And you can see it starts to go up exponentially. So what's the thing to take from this? Well, the main thing is to just recognize that you have a lot of different choices. Don't think that you just buy the at the money and sell 1 strike out, or buy 1 strike in the money and sell the at the money. You've got far more choices. Should they be 1 strike wide, 2 strikes, 3 strikes, bull, bear? How do we want to arrange these different vertical spreads? And once you do that, you're going to make better decisions. So you can see with just a handful of strikes, each one gives you a little different risk-reward profile. This first one here at the bottom is going to cost a lot and give you a very small reward, but it's doing that because it's in the money. Both of these options are deep in the money. And because both options are in the money, there's a high probability for it to expire at maximum value. So the market bids the price up and that leaves you with a small reward. But I could also come up here to the orange one. That's the 105, 110. And it's a little bit riskier. And so it's going to be cheaper. So we can't lose as much and we might have a better reward. And you can see that each of these start shifting up a little bit higher. Unfortunately, most traders would look at this light blue one up here and say it's the best. And even worse, they'll say it's the least risky, because they'll say, oh, you can only lose, looks like maybe 30 cents right here, and you might make 470. So they'll say, oh, you don't have a lot of risk, but you do have a lot of reward. It's just the opposite. You have a ton of risk. The stock is way out here somewhere. Both options are out of the money. You have a very small chance for this one to expire in the money, much less at maximum gain. And because of that, the market bids the price down and leaves you with a very large reward. But this picture right here is what you want to focus on when you are choosing your vertical spreads. You want to take just enough risk to meet your goals. And once you understand just how many vertical spreads there are, you probably have a lot more work to do to think deeper about just which vertical spread you should use, because there's a lot more than you see. And for anyone who'd like to learn more about the arts and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a Candlesticks and Technical Analysis course. It's all at optionsatoz.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.